Welcome to Scientific View, Episode 3. This video summarizes Brian Shannon's book, Technical Analysis Using Multiple Timeframes, focusing on key takeaways for effective trading. The book teaches traders across all markets how to combine multiple timeframes for better decisions. It emphasizes practical, repeatable setups using price action, volume, and moving averages, while integrating essential risk management and disciplined journaling. The core idea is simple. Higher timeframes define the market bias. Lower timeframes provide precise entries and timing. Middle timeframes confirm the setup. This sequential approach reduces noise and creates a repeatable system for better risk/reward. A typical hierarchy uses the higher timeframe, HTF, for trend and bias, the mid timeframe, MTF, to validate signals, and the lower timeframe, LTF, for exact entry and stop placement. For instance, you could use daily, 4-hour, and 15-minute charts. Market structure and context begin with identifying HTF swing highs and lows and marking major support and resistance zones. Use the HTF context to filter out noise on the LTF, looking for microstructure breaks or retests as triggers. This chart illustrates the higher time frame or daily chart, showing the major support, resistances, and moving averages, which establish the market's long-term bias. Here we see the mid-time frame, or 4-hour chart. This is used to refine the setups and confirm that the structure remains intact, aligning with the overall HTF bias. Finally, the lower time frame, or 15-minute chart, is where you find the precise entry and exit points, allowing for tight stop-loss placement as indicated on the chart. Moving averages visualize momentum and trend. HTF MAs act as dynamic support/resistance, defining the long-term bias. They should be used for confluence with price action and combined with the HTF trend to improve trade probability. Volume validates price moves. Strong breakouts come with rising volume, while low volume breakouts often fail. Look for volume spikes at key HTF levels and use volume to confirm retests, indicating institutional interest. For entries, always trade aligned with the HTF bias. Look for LTF patterns, ideally after a break and retest of a logical level. Confirm with the MTF and use LTF structure for tighter stops to improve your risk/reward ratio. Stops must be placed beyond logical structure, such as an HTF swing high or low. Calculate position size based on a defined risk percentage, usually 0.5 to 2%, ensuring monetary risk is consistent. Reassess and trail stops using LTF clues. Predefine targets using HTF levels or measured moves. Take partial profits at milestones to de-risk the position. Trail stops using LTF structure and avoid emotional exits by following your predefined exit rules. Common setups include breakouts confirmed by HTF trend, pullbacks to HTF support followed by an LTF trigger, or a break and retest pattern. Always look for volume confirmation to validate the setup's strength. Trading successfully requires discipline. Stick rigidly to the HTF bias and use a checklist before every entry. Accept losses and maintain a journal to track patterns in your behavior and outcomes, reducing impulsive decision. Brian Shannon's practical tips emphasize trading only in the direction of the higher time frame. Use MTF consistently, prioritize price and volume over indicators, and be patient. Practice the method until consistency is achieved. In an example trade walkthrough, identify the HTF uptrend and key levels. On the MTF, look for a pullback. Finally, on the LTF, wait for a trigger candle at support for entry, planning stop and target based on structure. Avoid trading against the HTF bias, as LTF noise can be tempting. Don't overtrade low-quality setups or rely too heavily on too many indicators. Always wait for confirmation and ensure proper position sizing. Here is an actionable checklist. Identify the HTF trend. Scan the MTF for confirmation. Wait for an LTF trigger. Define your stop loss and size. Set targets, and finally, journal the trade. To apply these concepts, read the book, practice MTF scanning, and paper trade for at least 30 days to build confidence. Maintain a concise trading journal and rewatch this summary for reinforcement. Thank you for watching this video. Please remember to like, subscribe, and press the bell for more trading insights.